I recognize myself for 5 minutes. Mr. Nutter, do you believe that private reinsurance market has a willingness to provide reinsurance of the NFIP's flood risk, and secondly, to put together a reinsurance program for NFIP to place in the reinsurance market? What data would be appropriate for FEMA to provide, and is that really necessary?
Yeah, Madam Chair, the reinsurance market is very interested in exploring this with the NFIP. The reinsurance market routinely provides reinsurance for insurance companies, but it also provides it for other government-related programs. The California Earthquake Authority buys something like $3 billion a year in reinsurance capacity. State wind pools do. So there clearly is an appetite and a desire to look at catastrophe risk. It's a common use of reinsurance. I will supply for the committee staff, if you would like, a more detailed set of metrics that would be appropriate for this. And what I would say is that you'd expect that the program working with the private sector would want information related to the types of properties that are insured, the insured values, any mitigation in the area, the kind of things that would even the layman would understand would be necessary to fully evaluate the risk, and then to make a recommendation to FEMA and NFIP about how to structure a program that would be successful when placed in the market.
Yeah. Please submit for the record the data that's necessary.
Thank you, I will.
Yeah,
Yes.
without objection. Thank you. Mr. Ellis, in reviewing the subcommittee's discussion draft, can you elaborate for us how it would reduce the burden on taxpayers, and can you provide us with specific recommendations to improve it in this regard?
Sure. Thank you very much, Madam Chairman. No, we definitely think that the bill is a very constructive start in this process, and certainly the areas where we're going to allow the rates to actually increase. Both one is that it would go from 10% maximum annual increase to 20% maximum annual increase. Also, the fact that it increases the deductible for pre-flood insurance rate map properties to $2,000, also something that would help protect taxpayers and reduce some of the subsidy for pre-firm properties. And then lastly, as you start moving to the special flood hazard properties and essentially the provisions to try to reduce the subsidies by allowing the rate increase 50% in the first year and then 20% each year after that, all of those factors really start moving the program in a much more actuarially sound or much more fiscally sound and off of the backs of taxpayers.
Thank you. And then for anyone who cares to answer, why has there been a retreat in the number of companies participating in NFIP? And do you think that any primary insurance companies would ever be willing to include flood insurance in the basic homeowner's policy with regard to properties outside the 100-year floodplain?
I would certainly be willing to take that question.
Ms. Jallet?
The main reason carriers have been leaving the National Flood Insurance Program is, number one, the profit margin is very slim. We receive approximately 30% for administering this program. Out of that 30%, we pay our agents 20%. We then pay state premium taxes of 2%, which leaves us 8 points to manage this program and to pay for all of our costs. Not only that, the program is very, very technical in nature, and a lot of carriers have felt that because of the complexity of the program, they do not really have the expertise to remain in the program because of the litigation that has been ensuing over the last few years. They feel like the exposure that they're at due to the litigation is not worth remaining in the program.
Thank you. At this